Hello, everyone. Today is the CINDIE tax planning Zoom meeting for 2023 tax season. Today we have 5 agendas. One is the quick intro, 2 is the critical days, and then we need to talk about some important contents, and 4 is about record keeping and some knowledge that you can get from CINDIE regarding your tax preparation. And then the last and most important subject today is audit status, some strategies and some case studies to share with everyone. CINDIE is a registered CPA firm. And we also do tax planning, tax strategy, and tax preparation. We do accounting for bookkeeping and reporting. We also have some assurance services provided for forensic accounting, audit review, and compilation. Some critical dates. You can find more details on CINDIE.com tax filing dates. Apologize for the small words that you see here. First, it's a CINDIE's critical dates, right? We like the client to send us the information for the 2023 by early 2024, so we can have enough time to prepare information, get back to the client for feedbacks, and then get a more accurate counting of their tax record in time for the filing of their 2023 tax return for S Corp partnership by March 15th, for corporation, individual, and trust fiduciary tax return by April 15th, and nonprofit tax returns by May 15th. There are some business tax deadlines. January 13th, you need to do the 1060, 1099, 1096, W2, W3, and all these other 1099s. And then March 15th, we mentioned about the tax return filing deadline, and April 15th, some important deadlines. Estimate tax, quarterly tax payments, important. So before we may not get penalty or interest because IRS, even though they have the right to do so, but their system may not be able to calculate all of them so accurately. Now they're able to. I'll show you some cases after about what the consequence and today's status. Reporting your quarterly payroll taxes when the business have employees. For Q1, Q2, Q3, Q4, don't miss them. This in addition to your monthly, semi-weekly, or quarterly tax deposit. Important contents. So now we have the dates. Let's take a look at the contents, what we need to do to prepare for it. First, there are some new improvement that we did. So now we have a CINDIE secured data upload. Sorry, it's the data upload site. So this site is like the black box. You can drop your information into it and then put your email address. We will get a notice that you send us the information. We might change password periodically, and if you can log in, let us know and notice us. We'll send you the new password if needed. We also added some video explanation on YouTube channel CINDIE Tax, CINDIE space tax. You can search that on YouTube to find us. Web-based forms. This is like every year before, but with new updates. we have business. When you want to open or manage a new business, we have some forms that could help you to organize your thoughts or complete your thoughts regarding to what types of business you want to open in what kind of legal form. Standard engagement letter, we have a checklist. Again, that's for you to be able to help your tax record more complete, more accurately, hopefully, and give you some structure to put your information together. And then if you have contractor, basic forms that help you to organize your thoughts as well. Individual-wise, we have the checklist, we have the questionnaire. We also have your foreign related reporting forms. Again, there are also tax planning forms that help you to, if you want to do your 2023 planning or 2024 planning, we can also help you organize information and organize your all the related activities, tax activities as well. These are some checklists in details. You can always find it on our website. For individual, we will need your important email address. Everything we have to go through the email as an official formal channel for your tax information and tax filing information. Birthday is important for the owners. So those are the basic information we need. We also need your bank information to do the tax deposit, tax refund, and tax filing. Compliance related information, engagement letter, annual reports, payroll reports, state sales tax, state certificates, operating agreement, all the information that relate to your business operation and tax activities. Bookkeeping records, right? The bank records, credit card records, send us all the information into our secure site. Some client wants us to just download the information from their site. We can do that as well. From their bank site, we can do that as well. Tax engagement. If we do your tax bookkeeping, then we don't need this profit and loss statements, balance sheet, and general ledger. If we don't do your bookkeeping, then this is information we need to put our record together for your tax return. Overseas. So there are lots of companies has foreign ownership, right? And has, or it's a subsidiary of foreign company. We need the relationship organization chart and also the ownership information. Tax paid. For both individual and the business, we will need your estimate tax payment that you made in each the quarter and at extension, if you file extension with the payment. And we also need the IRS letter or state letter you received, just to make sure that we have all the relevant information. If you're a new client, we need prior 2 years information. Same is true for individual. So individual checklist. Again, all the basic information here are all critical information. We cannot miss any of this information. Anything that we ask here are basic information that needed to file a good, accurate tax return. Email address, important. And your current address where you can receive IRS or state tax communication letters. The state and the IRS are still doing, is still using letters to communicate. That's still the law and statute requirements. So they have to do it that way. So this information are extremely important. Address. Income, all kind of income. We list here, maybe there are more, but we pretty much captured that relevant to an individual tax return here. So identify the ones that's relevant to you. W-2, foreign income, 1099 NC, 1099 miscellaneous, K1, 1099 interest, 1091 dividend, and 1099S here. Don't forget that. 1099B, 1099K, and 1042 AA05. All those forms that you saw it in your mail, keep them, scan them, send to us. Deductions. Childcare company here, make sure you give us their tax ID. Without tax ID, we cannot use the information for deduction. Primary resident, property tax, and mortgage information, important. You pay tuition, give us the 1098-T. We need the information to prepare tax return. Oversee of foreign information, account, company ownership, and also your information that relate, if you're not a resident and you stay here for a while, and then we know the dates to see whether we need to classify as a tax resident. Tax paid, estimate tax paid, your withholding tax paid, and again, state letters. Bank information, please, very important. We need to have that for us to prepare your tax return correctly and for you to get your refund quickly. We call CINDIE knowledge tank. So really it's about the information that might be relevant to a tax preparation, and you organize your tax preparation thinking. It's on cindie.com/blog. So there are also very good information on IRS website, right? www.irs.gov. This is the main source, the only source almost, like when I have a question, I go there to find the answer to my question. Make sure that you actively retain your tax information. Maybe you can do it monthly, to at least quarterly, to look at all your numbers, your money that you spend, money you earned, by dates, by events. So you'll be comfortable at the year end. This is the main focus of today's presentation, audit status, strategy, and the case study. We all know there's Inflation Reduction Act, right? 2022. There $80 billion was given to IRS to do these 4 things. Hire IRS agent to do more audit and examination, add support to their operation, and modernize their business system, and provide more service to taxpayers. Statistically speaking, also regarding to who's going to get audited, right? Lower income and higher income. So for higher income, every 100 people, there's 1 person get audited, 2 person get audited, and 8 person got audited, right? If your income is over 10 million. For lower income people, no total positive income people, they also get audited. More like 1 out of 100, right? And the lowest audit people are 25,000 to 500,000 AGI. So you might have higher income, then you have deductions at the end, then you got the AGI, adjusted gross income. This was based on audit proof strategies. So what is our strategy? Get prepared, right? There are 1, 2, 3, 4 things you can do. Always report all income. Always make estimate tax payment. You'll see why. And then claim reasonable, legitimate deductions. Try to claim deductions that make sense for income. So ultimately, the best way to avoid an audit is to be honest. If you do that, then you might manage to stay off the IRS audit list. Even if you're a higher earner, so we work hard to make legitimate income, right? Don't be afraid. Just because you might get audited and don't make more, right? But just do the right thing and get prepared. So you have good record keeping. And this is like insurance, I call it, insurance premium for dealing with audit examination and also have a peace of mind. Use the accounting software to track your record. There are lots of online free software that you can use too. Quarterly review of your income and taxes, make tax payment on time. Some recommendations. Business, right? We need to retain complete and accurate information for all the bank records, credit cards, investment, cash with receipts. If you pay something with cash, make sure you got receipts. Individual, we need to keep a list of bank accounts, investment accounts, etc. If you have real estate, rental, property, make sure you retain the records. If you do cash payments, make sure you got a receipt from the third party. And it just feels, I feel so upset when my client doesn't have the deduction that they actually paid for, and just because they don't have that record. So if they paid cash, especially if they paid $10,000, $20,000 for some renovation repair projects, and they don't have record, they can't get deductions. That's, to me, just really upset to me. So make sure you get some record. Okay, when you get a letter, right? How do we respond to that? And what's our mindset supposed to be? When we get that examination letter, respond. Make sure that you respond by deadline. A phone call, a letter to tell them you need more time. That's also a response. Just don't ignore it. I saw one of my clients being sent over to the tax court simply because he didn't respond to them. And then he came to us getting to the final stage of the whole process. It becomes so late, right? There a lot more can be done to prevent that from happening. Mindset, we need to trust the system, right? IRS told us, if your return is selected for examination, it does not suggest that you made an error or you are dishonest. Returns are chosen by computerized screen and by random sample or by an income document matching program. And I'll show you why as well. There's a case on that. In general, you can, this is CINDIE strategy, right? A mindset. In general, you can get the message across with reason, logic, and facts. Whether it's state or federal, right? You do the three things. You can pretty much get your case heard. And of course, they're time consuming, need energy and need determination as well. But just trust the system. It can be, your case can be heard fairly. Here's some cases. Number one here is a tax return we filed for a client for the 2020 tax year. And on the return, we requested $42,900, right? This client got selected for audit. Again, there are pretty much three types of audit, right? One is just computer generated, like random audit. And then there's remote audit. And then there's also field audit. Field audit is most costly in all three audits to the clients because they chose a local agent in your area to visit you and then stick with you for hours in each appointment. So very costly to the clients. Let's try to minimize that as much as we can. This is chosen as second type. It's a remote audit. Somehow client was able to get through to IRS saying they are going to give her the $2,900, but they did not the $40,000 refund. So the client to us, the first thing we do here is get power of attorney, whether state or federal. We all need a power of attorney that then we can represent the client to take care of the process. So what we did, about like 100 pages around documents that to IRS in couple correspondence to them. But eventually, we believe that client is deserved that $40,000 refund. So at the end, IRS agreed with us. The regional return file was correct. There's no change. So the client was so happy when she saw the $40,000 in her bank account. Second case. This is about the first examination, right? There's a computer match happened, found out this client of ours missed a few income. They didn't give us, and they didn't know they had it until IRS told them they have it. IRS saying, all right, you owe us $14,600 because you missed this few income. We look at the return and found information from the clients and made an estimate saying, yeah, we owe some additional tax, but that's not the number we owe. We owe much less than that. So eventually IRS agreed with our position. So the number from 14,600 become 500. Again, if you believe you're right, then we should make sure that we are being heard and get it correct. Number 3, this is a case from Delaware. The client got a bill of business, right? $143,242.61. Very large number. When we look at the case, we feel client doesn't owe anything. But there must be something going on that made the state think the client owed the money. So we went through each year's filing and found errors in the findings, made the correction, and then talked to the state, asked them, what else they would need for them to drop the charges because we really don't believe we owe the money. So we did a couple of things. Again, got the affidavit and asked the client to sign it, all these things. So eventually the client said, the state said, the entity is current and nothing is due. So no, what a relief, right? We're happy for the client. I'm sure our client happy too. And that's a good ending. Number 4, I mentioned earlier about estimate tax payment. No, the IRS is enforcing that start from 2022 very stringently. Not that they didn't enforce before. No, they are much more accurately to calculate based on the Internal Revenue Code, the tax law, right? About their right to collect the revenue on this number. So the client, they said the client's supposed to pay $106,000 for that quarter, but then they said you didn't pay it by June 15th. And then, of course, client paid more later on January 15th. You remember the dates we talked about, critical dates, right? So each of the dates that we're missing, the payments, the IRS is calculating the penalty on it. So we made the payment. However, they said, oh, you're late. So we're going to penalize you another $8,000. So we called, we discussed and went through the code, that really nothing that we can do at this point. So make sure that we should make the payment on time. Okay. There's another case. This is about interest being charged, right? After April 15th. So some people want file the tax return late by extension because all kind of reasons. But we have to pay tax by the 15th, right? If we late by the 15th, they're charging us interest 8% on 8%. It's like compounding, like Gaudi debt, right? So compounding interest. Again, if we feel our money is where we can put the money, where we can earn more than what IRS charge us, then there's a good economic reason you do that. But if there isn't such good economic reason, make sure we make the payment on time. Okay. So sorry about that. Number 6. This is a state case. You know, the state, just remember, both IRS and especially IRS is hiring so many new agents. They are not experienced, so they couldn't make mistakes. State is the same thing. Both IRS and state, based on my experience dealing with them, the ones that experience already get promoted are not doing the real work. So the people who's doing the real work are not that experienced. And in this case, the client got a bill of $3,410 from New Jersey State. Same thing happened in other states as well. This is one of the most bizarre cases that I encountered. It's the state create. Okay, so the state keep charging them. They paid for it, keep sending them letters, ask them to pay more. And I did some research. I found out that possibly state created 2 accounts, 2, not 1, for 1 taxpayers. So one side they pay, the other side they're charging them. Since you didn't pay, of course, you only pay once, you feel like you don't pay for 2 accounts. But the state doesn't talk, I guess they didn't talk to each other, or they didn't know that they're making that mistake. So I wrote a 2-page letters to the state, tell them what happened, what they're doing, and what could be possibly wrong, that what they're doing, what's the right thing to do. So give them literal instructions of what they're supposed to do. And they want to do the right thing. I just believe them, right? Because as the same profession, all those people perhaps the same accounting or tax professionals, they want to do the right thing, but they didn't know what the right thing is. So they actually resolved this. My client actually got money back, to a refund back, right? Instead of paying them $3,000. Okay, last thing is some small tips. IRA, Inflation Reduction Act 2022, had given lots of credits related to clean energy, efficiency energy, right? For business, there are page long credits for business. I'm not listing here, but you can get this from the website, especially you are thinking about business or running your business, you might be eligible for all these credits. And individual-wise, there are 2 types of new credits. One related to vehicles, the other related to home. Again, there's income limit. Okay, for new clean vehicle, $7,500 credit. If our income is more than $300,000, then we won't be able to get any credit. For previous owned vehicles sold by the dealer, then you might be able to get some credit if the income is below 150. Home, if you're making home improvement related to efficiency, energy saving, and save those receipts and get those invoices, ask them whether you're eligible for this credit, and also give us when you file a tax return. People ask about advertising, marketing expenses a lot. There are some examples here, and this is what the rule from the IRS side. It's called reasonable advertising expenses, right? They list a few things here. Cost of providing meals, entertainment, recreation facilities to the public as a means of advertising and promoting goodwills. Those are legitimate marketing expenses. And the other things are related to anything that relate to promoting a goodwill, right? They call this the marketing. So this is for this year. So tax planning session, and I appreciate you listening to this. And if you want more information, feel free to go back to our website, www.cindielc.com. Thank you for listening.